Volatility is often mentioned during crashes or big moves. I'm going to use a proxy for the volatility. So you can use the VIX, volatility, the variance, the Bollinger Band with multiple ways to measure basically the same thing. In fact, when we were talking about candlesticks, saying how we kind of want to trade when the candlesticks are shorter. That's the same as when the volatility is low, because that way we can place tighter stop losses, and so we don't have to risk as much. So we effectively get better odds for the bets that we take. So here I'm just going to use the average true range. So we can get that over here. So indicator, average true range. And basically, when the volatility goes up, the average true range goes up, since the typical daily moves increase. So if you're watching this now, the bitcoins have been jumping all over the place. Similar thing is happening with the stock market. So the volatility will be higher, and the average true range, the movements in the stock market and bitcoins, are higher than they normally would be. And we can see that if I zoom back a bit. So you can see, normally there's not much going on there. Again, the scale is, see if I move over here, it'll be clearer. So since bitcoins have been increasing exponentially, the scale keeps increasing. So even if you just go back to this is the end of 2016. So that's only roughly a year ago. And back then, bitcoins were not even 1,000. So that's why people are so excited about bitcoins, because they really have come quite a long way. But here you can see, as it was going up and up and up, and at that stage, people were going, "Oh, will bitcoins hit 1,000? I mean, $1,000 a bitcoin? That's crazy." And so it shot up, and it went past 1,000, and it shot past 1,000. And you can see that the volatility in the average true range jumped up. Then, so it was at 1,200, and it fell back to 750, 800. So that's fell maybe 33%. I mean, roughly a third. So it seems a bit silly to say 33%, but it fell roughly by a third. Since here, the bottom is 600 as opposed to 0, that's why it doesn't look like, it looks like it fell to half its value. Then what happens is it keeps going up. So it didn't care that the market just fell by roughly a third, and that the volatility went up so much. But there's no limit to it. I mean, the average true range could be millions, theoretically. So that's what we're not intuitively used to. But mathematically, there's no problem. So likewise now, if the number wasn't that big, I mean, now you're talking about, it was 20,000. Well, it was the same when it was 1,000. when it was 1,000, the volatility shot up. We had a big fall. People were going, oh! But then it returned to just going up and up and up. It hit a new high again. So what was that? Now it's up to 1384. Fell back to 8. So like 400. Again, like we need. What's 400 over 500 is 1/3 of 1500. So, but again, it nearly lost a third in value here again. But again, it kept going up. So this is what November 2017, and then within the space of how far away is this? This is May. So in about 6 months, it went from being about 700 to being 1,800. So easily doubling in value. Again, that's why there's been such interest in Bitcoins. That anyone who had invested in these should be sitting very pretty. Even with the big falls that have happened recently, I mean, if they'd bought from way back here, they're still in very good profit. But so we can see here the basic pattern that the markets stay calm, and with the stock market, they've been very low for a long while now, because again, there the talk is about, I know this is about Bitcoins, but there as well you had low volatility. The concern was that that's because the central banks have been printing money and supporting the markets. You know, the companies were basically borrowing money at 0% rates and buying back their own shares. So it looked like things were great, and the CEOs and stuff could pay themselves big bonuses. That is linked to Bitcoins. I mean, one of the reasons people want Bitcoins is that it's not something where you have money printing going on. In fact, it's impossible to print Bitcoins. This is a minor an aside here. I was just having a look, and basically the link to this is in the description below the video. But the thing is that with Bitcoins, there's a mathematical limit that you can only have 22 million Bitcoins. I think it says here, blah blah blah. The supply of Bitcoins will approach. So at the moment, it says here, oh yeah, to give some context, the current supply of Bitcoins is about 13.25 million. I'm not sure when this was written, so that's probably increased since. But there's that limit. So we're not concerned about money printing, that the value of our Bitcoins will disappear that way. And to mine Bitcoins is expensive, so it's not free for, you know, as people around the world are discovering, you know, doing the number crunching to produce new Bitcoins. In the end, it comes up with this figure. Again, I'd say it's I don't know all the steps, or I think most of the steps here. It does mention this magic 15% number, which it could, yeah, if Bitcoins were to achieve 15% of this evaluation, why would it? I mean, I don't see any reason it should, but then again, I don't really know. The thing is, at least here, it does come up with an estimate of 500 Bitcoins being worth $514,000. So when we look at the fact that, oh, I don't know, 20,000, that was very high. It's a new thing. I mean, I haven't done a fundamental analysis. Again, I'm looking at this purely as a chartist, so I don't need to know the fundamentals. I don't need to know the theory of what this thing is. I just look at the price action. But there is a theory behind this, justifying so that people feel that Bitcoins are worth more than 20,000 quite comfortably. So again, we see the same process. An increase in volatility as the market moves into it crosses a critical level. We have big moves. Again, as I said, a 30% in the stock market. If you were to get like a 30 to 40% drop, those are historic drops, and they don't happen that rapidly. So Bitcoins are very volatile, but they're new, so the people are slowly coming to terms with them. The other thing here is, as it broke up to a new level, and again fell back, we have a higher average true range than the last time. So again, this is average true range is kind of proportional really to the value of the Bitcoin. So if the thing's growing, if the percentage changes are the same, then the average true range should also be increasing. The reason I say that is because this means that we can't go, oh, I'm going to wait till the average true range is, say, 92 or say 100. If it touches that, that's probably the top of this bubble. And I'm going to sell because it's going to fall from there. That's probably not a bad idea. That if you kind of go, look, if this was the height, this was the level of volatility in the last peak, the next one's going to be even bigger. So if I use the previous one as my cap, it's a good time to get out, because when the next bubble hits its peak, this seems to have like a 30% fall or 30 to 40% fall afterwards. So if I sell at this level, I get out. If I sell at the height of the previous peak, I get out before the big fall happens. So that was one of the points that I wanted to make, was that yes, it looks like, wow, it's so volatile now, and wow, there's been a big fall, but we can see here that has happened again and again. So then we had that one, then it shot up to here and it looked like it was the end of the world. Then it fell back, and that's quite a big fall. Then it did it again, and had a big fall. So repeatedly we're getting, and this is such an incredible up move. We didn't have this scale of move in, like, say, even oil or gold, or this has gone from, this increased by, even at this stage, by a factor of 4 or 5, and this is only 2,800, and we know it recently peaked at about 20,000. So that's just putting things in context. Again and again and again and again. Now this time is interesting, or this time is different, in that the pullback has been far greater. That it's gone from 20,000 to less than 10,000. So instead of a 30 or 40% fall, we were talking about if it's gone from 20,000 to 8,000, so 50-60% fall. But this is also different, because if you look at this, you could kind of nearly draw a line like that, but then it's exploded. Like, it's gone from, it's grown far faster. Though in a way, maybe I should have a log plot, because if I have log scales, that might be more appropriate. because it's increased from say 7,000 to 20,000, but that's only doubling, less than trebling. And remember, it was about 700, so it's by the time we're talking about 7,500, it's increased by like a factor of 10 in roughly a year or so. So I don't know whether, I mean, there's no reason why this, like 20,000, should be finally the end of this remarkable run. Again, remember, we saw that article where it made an estimate of what is the value of Bitcoins, and it was over 500,000. In which case, there's a long way up still left. So that's just a quick look at, though slightly longer than I would have liked, but there's so much to potentially say, so this is quite compressed. In a way, I just want to say as well, was that how different are things? In that if I was looking at this from an RSI perspective, I'd have a similar, when this move happened, I'm sure the RSI would be also at a very high level. It would be at 80, 85, if not 90. It would be giving strong overbought signals. I'm sure the moving averages would be also saying these prices are well above the moving average. So, that it's getting, in general, the price has been following maybe at this stage like the 10-day moving average, and then suddenly as it shoots up, it's more following the 5-day moving average, and then the 2-day, and then it crashes. I mean, that's what happened that's typically what happens. I mean, whether you're looking at oil prices or share prices, that when you're having that extreme move, suddenly you're having to, it's following more like the 5-day or something like that moving average. And really, when it cannot maintain that extreme level of growth for very long, because then if it keeps doing that, then suddenly Bitcoins will be worth more than all other wealth in the world put together, which is nonsensical. People mainly talk about volatility when you're having a crash, like you're having with the stock market and stuff as well. So I thought I was just going to say, oh look, you can use this method to find when it's the end of a crash. But actually looking at the data, it seems to be, it's just another wave. So we've had so many periods where the volatility shoots up and then it calms down, and then it shoots up and then it calms down. So in a way, it actually isn't particularly different from normal markets. And again, you can look at whatever timescale you want to use. So if I look at maybe the hourly plot, the same thing happens more regularly. If I look at the 5-minute plot, you'll see these kind of things happening regularly. So that's just the nature of markets. There's another idea which I think is more particular to what I would call these kind of burnouts, peaks, climaxes. And that's the volume of trade. So I'm just going to have a quick look, and that one will be quick because there's very little to say. So it should really be a couple of minutes. See you then.